Good morning, everybody. I was just so eager to come onto the stage. That's why I got caught in no man's land over there. Good morning again. I was here on Monday, had a great time hosting a session with a private equity company from China. Now we're going to talk cryptocurrencies and blockchain. So welcome to all you counterculture suits out in the audience. This is going to be the fun one. It's an interesting time, obviously, for crypto and blockchain in general, Bitcoin, if you want to call it that as well. China, of course, has banned initial coin offerings, also closed down a number of exchanges. Also, US regulators obviously are trying to figure out what kind of asset class these different cryptocurrencies are. Are they a commodity? Are they a property? Are they a security? Very interesting times right now. Also, when a number of institutional bankers and also technology pioneers, they're going into cryptocurrency companies. At the same time, we get the big names like Warren Buffett is the latest. I think he called cryptocurrencies and Bitcoin rat poison squared. So when we start off with this kind of comments, of course, we heard as well from Jamie Dimon calling it a fraud. Then he backtracked and said, wait a minute, our clients actually want to trade in this, so maybe I was wrong. And then last week, I had the opportunity to talk to Jamie Dimon up in Beijing. And I'm glad I saved the question to the end, because I said, okay, I'm going to give you the final word on cryptocurrencies and blockchain and Bitcoin. And he said, I'm not talking about it. So fortunately, we have an expert today here at the CFA Institute General Meeting to talk about it with great authority. Sandra Ro is our next presenter. She is the founder and managing director of Vector Crypto Capital, also managing partner and COO of UWin Corp, also recently the CEO of Global Blockchain Business Council, or GBBC, and she is going to give us her insights into the rapidly changing world of crypto and blockchain. Please welcome to the stage Sandra Ro, and also please bring us your questions later. Thank you.
Thank you.
Welcome, Dad.
Thank you. Good morning, everyone. Wow, I'm impressed. I have to say, it's early morning on the third day, and you guys are all here. So I'm going to start off by just talking a little bit about data. And I know you guys might be thinking, I'm here to talk about cryptocurrency. Why are you talking about data? Because at the end of the day, we're talking about data. And this is why I want to frame it this way. When we think about what is the most ubiquitous, distributed thing out there today, it's email. Email is data between you and me and anywhere else in the world in split seconds, right? Hopefully. Well, take it to the next level. Imagine a world where data is now value and moves around in a split second. Interesting, challenging, and for some reason very controversial these days. So I'm going to try to break it down. I have been asked to do a primer. So for those of you who are experts or know a lot about cryptocurrencies, I apologize, we're going to do a little bit of a recap. But for those who are not, hopefully you'll learn something this morning. We have amended, and I will be amending this talk from 45 minutes of presentation to actually 30 minutes, because Stephen and I are actually going to spend 30 minutes from the 15 originally allotted to do Q&A, because I think there's going to be a lot of questions. So if I go through some of these presentations or slides quickly, they will be available on the app, so please feel free to refer back. Perception versus reality. The world of magic internet money. So we have a little bit of a problem right now. Is my speaker working? Can you hear me? Okay. We have a little bit of a problem right now in the space, in the sense that what is reality is not always lined up with mainstream perception of what's going on in the space. And I have to say, we've got a lot of different characters and actors in the space now that don't exactly do well for reputation sometimes. And the industry is growing quite quickly, so there's a lot of growing pains. When I think about the genesis of this, I wanted to go back to 2008, because it's actually important to get a sense of why this actually started in the first place. And it's not an accident that it happened in the middle of the financial crisis. Just give you some, I have some stats here and some notes. August to October 2008, go back in time. Some of you and many of you may have been in the financial markets. I was actually at Morgan Stanley in London at the time, working in global capital markets on the derivative side. So I remember it vividly. But Lehman had filed for bankruptcy. Bank of America had bought Merrill Lynch for $50 billion. The US government had just established the $700 billion TARP, right? Well, did you know also at that same time, Bitcoin.org was registered on August 18th, 2008. Did you also know that Satoshi Nakamoto, who is famed for the white paper for Bitcoin, had actually come up with the paper and published it on October 31st, 2008, all within that same period. Okay. November 9th, 2008, the Bitcoin project was registered on sourceforge.net, which is a website that promotes open source software development. Okay, so that's where it began. The Genesis block, which is the first block of information that was registered, Satoshi Nakamoto inscribed this inside of that Genesis block. The Times, 3rd of January, 2009. Chancellor on brink of second bailout of banks. Do you know what he's referring to? He's referring to the Times article that came out January 3rd, 2009. That is inscribed in the Genesis block of Bitcoin. 9 days later, the first transaction was actually done between Satoshi Nakamoto, whoever that may be, a person or a group, and Hal Finney, a famed cryptographer who's now passed. They did one Bitcoin transaction, or they did a transaction, I should say, where 1,309 Bitcoin was worth $1 US, or converted the other way around, at 800th of a cent of a dollar to one Bitcoin. Why am I telling you this? Well, here's the thing. That is what started all the blockchains that you now hear about now. Everything came from that initial paper and from that initial concept. But here's the other thing. I'm going to talk about a little walk through history here. But there were things that were foundational that made Bitcoin and blockchain possible. What do I mean by that? Cryptography had been around for decades. Distributed systems have been around for decades. What happened for the first time is that Bitcoin and Satoshi Nakamoto, the group or the person, was able to bring together a number of these elements and actually create a system whereby you didn't need an intermediary. David Shum, by the way, who is a known cryptographer in the space, he created a digital cash system called eCash back in 1996, or 93, I should say. Did you know Bill Gates offered him a offer to integrate eCash into Windows 95? And he actually said, no thanks. The company went bankrupt. His DigiCash company went bankrupt in 1998. Could have had it way back then. So I'm going to talk a little bit about, and I've done already a bit about pre-2017. We're going to talk a little bit about the trading and ICO mania of 2017. And I'm actually really going to focus on what's going on now and the future, because that's the interesting part. So just to level set, I want to talk about categories that I think, in my mind at least, help me to understand what's going on here, because it's not just about Bitcoin. Cryptocurrencies, I classify as the ones that have different blockchains underneath them. And at the top level, they've got different crypto. Bitcoin, Ether, Litecoin are all derivatives, or sorry, Ether, Litecoin, Zcash, Monero are all derivatives of the original Bitcoin solution, but they're tweaked for different next generation elements. Some don't use mining, some are faster, some are saying they're more scalable. They have different reasons for why they exist. They're kind of like next generation. Some are private. Digital assets I classify as things that are physical or in the real world that will be tokenized into a digital thing. And to me, that's a very interesting concept. So one of the most obvious use cases is digital gold. How can you tokenize commodities? And that's already happening. Digitized fiat is one that obviously central banks talk about quite a bit. How do you take government money and turn it into electronic or digital form? And you might argue, well, what's the big deal? I deal in mobile money right now. What's the difference? Well, here's the difference. If the UK government, or any government, were to pay their employees directly, so every government employee had a digital wallet, and their monthly salary or their biweekly salary were to be paid in directly, you effectively could bypass the banking system. It would be direct from central bank to people. That would be the difference of having digitized fiat currency. So, with that in mind, evolution of transfer value. Like I said in the beginning, I'm talking about data here. We're talking about what happened from barter to gold to fiat currency to now what we're looking at, which is digital form of money over internet protocol, MOIP, MOIP. People seem very comfortable around the fact that we talk over voice over IP, we've got information over internet, but people seem to be a little bit, for some reason, disconcerted about value going over the internet. Why? Because at the end of the day, we're talking about math here. It's very unsubjective, or it's not subjective. It's math. Transacting and things being confirmed and determined by algorithms. Satoshi Nakamoto, as I mentioned, put out the Bitcoin project on SourceForge.net. And look, he said, announcing the first release of a new electronic cash system that uses a peer-to-peer network to prevent double spending. It's completely decentralized with no server or central authority. And that's the key thing that if anyone asks, what was the great thing about Bitcoin? Well, here's the thing. Double spend problem got solved. So if I wanted to be a bad actor, couldn't actually do a transaction with you and then turn around, take the same money and do a transaction with you, because that's just not possible on the Bitcoin network. These are a lot of terms, and I'm not going to go through all of them with you. I'm just putting them out there for those who just wanted a consolidated list of vernacular. And also the other thing I will caveat is that this terminology is changing constantly. A couple years ago, people were using the terminology virtual currencies. We kind of moved away from that. We're now talking about cryptocurrencies. But I'll tell you right now, there's a big debate about what cryptocurrencies really mean. And even the definitions that I've highlighted to you are just, what I think help people get their heads around, or at least helps me get my head around what are proper classifications. But I would imagine in another year or two time, that's going to normalize into an industry standard. The problem right now that we have is we don't have industry standards. So please, take a look at your own leisure. I unfortunately will not be able to go through all of these with you, but they're there. I just wanted to have this highlighted because if you guys need a resource for how these transactions work and you're really interested in the algorithmic piece of how this works, there's a great website called BlockGeeks. And I've gotten their permission to let you guys know about this and also for you to go there. It's a good resource. There are other resources as well, but they do a fairly good job of helping you go through the elements of it and how validation and confirmation on a network works. So this is a piece that doesn't get highlighted very often when I hear people talking about cryptocurrency, but I want to highlight it here, particularly because we're in Asia. There's a whole hardware element of the mining piece for Bitcoin in particular and any of the other blockchains that require this mining. Mining is the form in which you are compensated and in solving algorithmic consensus solutions so that you can actually get compensated. So miners are the ones who actually validate, for example, in the Bitcoin network, the transactions, and they're compensated by receiving Bitcoin. And the hardware element has evolved dramatically. So in the early days when it was open source and you could just download it on your computer, you could mine and get Bitcoin. No problem. Your computer could handle it. Today, good luck. It is now a multi-million dollar business. And one of the big criticisms is the energy usage and the amount of money it takes to now have these mining hardware solutions. These mines, by the way, some of them, the real industrial grade ones that use ASIC chips, there's a chip war going on. If you really want to get into that, you can read all about it. Millions to actually have proper equipment. And a lot of these facilities are sitting in China. They're sitting in Iceland. They're sitting in a bunch of the Stans. They're sitting in Norway. They're cropping up all over Canada. So it's truly going global. And there are a number of what they call mining pools. These are groups of people who have, and institutions that have come together who are mining. And look, at Bitcoin, at wherever it might be, 9,000, 10,000, it is big money. Sorry, hold on one second. Let me just go back real quick. Proof of work, by the way, for those who are interested, is the consensus algorithm for how you agree on the Bitcoin network. I'm going to bust one myth right now. Not every blockchain is using proof of work. Some are using proof of stake. Some are using something called proof of existence. There's a whole bunch of other kind of proofs that are now developing, which don't necessarily require mining. So not every blockchain is using energy and mining the same way that Bitcoin is. If you're really interested, there's a lot of information around that. Bitcoin Core, there's a website I've put here. You can learn all about the project itself and the developers that are basically helping to maintain the system. It is a network of individuals and developers around the world who are literally in Reddit sessions, in GitHubs, working on different solutions or different conversations around different elements of keeping the Bitcoin protocol up and running. Oops, sorry. All right, Ethereum. I can't have a talk about crypto without talking about Ethereum, which has a different focus. It took Bitcoin and said, you know what? Bitcoin's kind of great for moving payments around, but it's not that great and flexible for other things. We want to do other use cases. You might add, well, what exactly? It started in 2013, 14 is I think when I first heard about it, but actually didn't launch until July of 2015. But its goal was to become the decentralized computer of the world. What can a decentralized computer of the world do? Well, it can help you launch distributed applications. So imagine anyone, anywhere in the world could create an application. And they call them smart contracts. And these smart contracts allow you to do everything from making payments to someone, but also just efficient processes. Like if you and I agree to do a certain act regularly and recursively over an X period of time, we can actually code that and make that effective on the Ethereum platform. That's the idea. And the use cases around that then started proliferating from money to identity, healthcare, records, payments, you name it. The crowd sale was done in August of 2014, raised $18 million, and now we know it's much bigger than that. It's a Swiss foundation. The Ethereum Foundation is actually a Swiss foundation, and the people who run Ethereum Foundation are actually distributed all over the world. There's a good group sitting in Singapore as well as in San Francisco and Berlin. This is a snapshot of a chart. I can't keep up with the price action, and frankly, at this point, I don't really try to. This was done a week ago. It's already moved quite a bit. So if you were to go to this website, coinmarketcap.com, you would easily see that the prices moved dramatically from where I've taken this snapshot. But all I wanted to illustrate to you is that we went from having 1 or 2 to now thousands. These are the top 10. Bitcoin's still the prevailing liquid cryptocurrency, but there are thousands now. And here's the thing. There might be thousands, but I doubt most of them will survive another year or 2. But they exist for different reasons, all of them. The ones to note that are particularly interesting are ones that are focused on micropayment. So one thing that's happened over the last couple years is Bitcoin has become costly and slow for scaling issues. And Stellar, for example, is just an example of one that handles micropayments extremely efficiently and cheaply. So there are a couple here that are particularly interesting to people for different reasons. If you are interested, each one requires a certain amount of research. So I'm going to talk a little bit about cryptocurrency trading and ICOs. I'm going to stop right here for 1 second and tell you what I do now. I actually spend most of my time talking about blockchain for social good initiatives because that's where I spend most of my time. But I do talk about cryptocurrency and ICOs because, unfortunately, whether I like it or not, it's what people around the world want to talk about, especially when I speak to millennials and Gen Z, I guess you would call them. They seem to be very interested in this paradigm shift. So we're definitely going to talk about this. So what happened in 2017 was this whole ICO cryptocurrency explosion. It kind of had been percolating for a while. I mentioned that Ethereum did do their crowd sale back in 2014, but here's the reality. It didn't really explode until last year. And when it exploded, wow. I mean, it was almost like crowdfunding, next generation crowdfunding on steroids. And unfortunately, what I had hoped was that cryptocurrency would, the community would actually self-enforce, self-regulate. But unfortunately, what happened? Big money, it started being worth a lot of money and value, and people started coming in who are quite unsavory and, frankly, scammers. We're now at the point where I publicly am very much an advocate for guardrails to come in and guidelines to come in because we cannot have people being duped or taken in by people who are obviously have less than good intentions. 2018, I call it the year of commercial and growth opportunities because we have a lot of different things going on. For the first time, we have real use cases that are actually practical and being implemented. It's not just about the whole pilot talk that was a bit of a fatigue in 2017-16. We actually have discussions going on around scaling, and scaling is actually starting to happen from a technical standpoint. We have real use cases that are blockchain for good initiatives, meaning how can you actually use this tech to solve real world problems? And to me, that's pretty significant. And the impact, by the way, across the globe is astonishing. In the last 3 weeks, I've been in Croatia. I've been in the US, obviously, and then I've been in Rwanda, and now here. It is happening everywhere. It's happening on small islands. It's happening in small towns. People are talking about it, learning about it, and I don't know where we quite end up, but for anyone who thinks this is not global and pervasive, I would say definitely take a look around, and it's no longer just about financial services. So that part's kind of exciting. Trading is not user-friendly yet. So for those of you out there who don't have a crypto wallet or have not bought any crypto, have no interest in buying crypto, this is not investment advice. I'm not a lawyer. I'm just laying out sort of what I see in the market, okay? And it's horrible. The user interface is ugly. Do you guys remember Yahoo back in like the 90s, I guess, when it was like the really old first version? We're kind of there. I call it the ugly duckling phase, because that's kind of where we are right now. It's really ugly, it's clunky, it's horrible as a user if you're not in the space to understand how you secure it. It's getting better. It is getting better, but we're not there yet. So what do we have? We got problems in the sense of we don't have enough education around this stuff. It's not beautiful from a user standpoint in terms of its simplicity, and also we also have gaps in the market at the moment. Insurance, custody, tax reporting, P&L reporting, all of these things are actually not there yet. And you might be surprised saying, well, if this is leading edge tech, why don't they have this stuff? Well, here's the thing. Developers are brilliant. They come up with really cool tech, but you need a lot of other skill sets to bring a product to market. Rise of crypto trading platforms. You may have seen some of these already. Coinbase is based in San Francisco. It is probably one of the biggest out there and well known. It started off as a wallet company. It's now got an institutional grade trading platform called GDAX, and they just announced yesterday they've launched an institutional grade custody solution. So as I mentioned, we have gaps in the market. Well, guess what? These guys are now filling the gaps. The billions that they actually made last year surpassed even their expectations because of the volume of trading that happened. Most of these guys are literally swimming in cash, and they are probably going to consolidate. Poloniex was just bought out by Circle Financial out of Boston. You're going to see consolidation. I mean, this is just very similar to a lot of markets that you see where it starts off nascent, it's a bit of Wild West, and now there's evolution and maturation going on. These are a whole bunch of crypto platforms. And here's the thing. I come from market infrastructure, so I worked at CME Group, Chicago Mercantile Exchange Group, and I have a really hard time calling these guys exchanges because almost none of them are regulated. So I tend to call them crypto platforms, though they call themselves exchanges. There's many of them, and they're proliferating, particularly in Asia, in Japan, and in Korea. There's quite a few. So here's the thing. Are we rebuilding old school infrastructure? In many ways, the crypto community is. OTC desks are cropping up. You may have heard that Goldman and a few other banks are launching cryptocurrency desks. If you talk to any of the purists out there in the crypto space, they're not necessarily loving what's going on here, which is basically cryptocurrency trading is turning into and morphing into just yet another thing to trade in the traditional finance space. It's profitable. And I've just given you some reasons for why they're so profitable. So any of you who trade out there, take a look at some of the spreads and what they're charging. It's a throwback, if you're from the FX markets, from like a decade or two ago. And then we've got crypto index products and derivative products. So my team at CME launched the Bitcoin reference rate and index products back in 2016, which were the precursor to launch the cash-settled Bitcoin futures. Now you've got everyone from NASDAQ to New York Stock Exchange Group to CBOE launching these products. It's only a matter of time. Yesterday, CME announced that they're doing the Ethereum index product. So that's the next one, the second one in the cap table. Well, those are coming. It's no surprise. This is just, again, a natural development of products. So let me talk about ICOs. It's a paradigm shift. It's not just about disrupting venture capital. It's around, again, a grassroots solution that allows you to basically have a direct access to capital from a lot of people around the world that you may not even know or ever meet. It's pretty astonishing to think that you could raise $30 million in 10 minutes because you put out a white paper and did some advertising online. That's a lot of the ICOs that happened in 2017. $6 billion was raised. This year, this number is a little bit stale. It's probably $4 billion, and if you include the Telegram ICO, which happened, which by the way, here you are, Telegram, they raised $1.7 billion. That was through private pre-sale ICO. That wasn't even a public sale. Anyone who's not staggered by these numbers, I don't know, maybe like, for me, this is staggering. How is this possible and what's going on here? We're now looking at, even with the regulatory environment, 2018 will surpass ICO trajectory will surpass what was raised in 2017, even with this regulatory climate. Something clearly is going on here. And whether it's a grassroots demand to have access to capital, or whether it's a more fundamental, I don't know, cultural global shift that's going on, I don't have the answer to that, but the numbers don't lie. And the question now is, how will these things be regulated? What are they? And here's the problem in the US at the moment. We've got people who are saying that, or sorry, institutions that are saying that they are money, that it is a security, that it is a commodity, and it's property. Well, most lawyers will tell you in the US, and I'm not one, but it's been stated that you can't have one thing be all four categories. So what is it? Good question. Tokens, how are they different from cryptocurrencies? I think the Swiss have done a brilliant job of, if they wanted to embrace crypto, they have, and they certainly have an epicenter now called, in Zug, Switzerland, called Crypto Valley. It's great marketing. And they've done some phenomenal things to attract companies. They've basically come up with, FINMA is a regulatory body, and they've come up with some guidelines around what they classify as quote-unquote tokens, whether you are a payment or a utility or an asset, and they've defined these things. Here's the problem, and this is what keeps this area so interesting. Your token could shapeshift, meaning it could be a payment and a utility, or it could be an asset and a payment down the road. It might evolve, so how do you deal with that? As a regulator, it's very challenging. So I'm going to go through this very quickly because I want to leave us time so that we have the Q&A. One blockchain? No. We're going to have many blockchains. And we already have many blockchains. We have private blockchains, which are permissioned networks. Think about, at large enterprise level, the equivalent of like intranets. We have public ones, like Bitcoin and Ethereum being the most famous ones. We have a lot of them. And the question now is, how will they talk to each other? Have we just not recreated the same data silos that we were trying to break down to begin with? These are the questions that are being asked. And there are projects called Polkadot by Parity Technologies and Cosmos by the Tendermint Group that are looking at interoperability solutions. And there's more than just one. And for paradigm shift, I mentioned ICO. Well, here's another paradigm shift for you. Decentralized exchanges. They're proliferating. None of them are big enough to really warrant, focus from a liquidity or market cap standpoint, or volume standpoint, but they're coming. How are regulators going to actually regulate something that doesn't have a center? It'll be interesting to see. And there's just a few here that I've listed. So of course, you couldn't have all of this happening without consortia being formed. So there are enterprise-level consortia, there are regulatory consortia, there are lots of nonprofit groups that are now being formed all over the world. And I've just listed a handful here. Many are coming out of the US and the UK, but you've got HKMA and MAS who have their own regulatory sandboxes as well. And I'm sure I'm missing some, so this is not a comprehensive list. Regulation is coming. I've already mentioned it. These are just a few headlines. There's more. DOJ has come out yesterday saying they're indicting the co-founders of the ICO that was backed by Floyd Mayweather and DJ Khaled. You kind of know that you're hitting some kind of odd top cycle when you have that sort of thing happening. And those guys are now in a bit of trouble. So look, I'm a ex-banker who definitely looks at risk. There is risk to what's going on, but what's undeniable are the numbers, the proliferation of jobs and opportunities that have cropped up in this space, the migration of people going from traditional finance or traditional institutions into this space. There's a trend happening. And whether you like this or not, I'm not here to convince you one way or the other. I think it's just clear that numbers and trends are showing a path in certain directions, and we can talk more about that. My big issue right now is that there's too much hype, there's too much jargon going on, and not enough building. And we need to really sort out some very fundamental technical issues that are still plaguing the blockchain space. But I always want to leave on a positive note. I mentioned before, there are blockchain use cases that are outside of financial services or touch financial services and start going into other industries. The ones that I'm particularly excited about sit in the sort of energy, entertainment, media, real estate, and environment space. We have a lot of problems in each of those categories, and hopefully blockchain can help in some way. If you're interested in going down this rabbit hole, I've listed a few places to go and a few names that I know personally and or have read and can advocate for. So there you are. Thank you.
Thank you, Sandra. I mean, the questions have already been rolling in, so you've been sparking quite a bit of debate through the audience here. You brought up the question about regulation in the United States without necessarily answering it, because we don't know what the type of regulation is going to be. And before we have regulation, we also kind of need to know, is it going to be classified a particular kind of asset class? Is it a commodity? It's highly speculative, like commodities can be, and this is the nature of a lot of these questions. Shouldn't it be designated a commodity? But then we heard the SEC also say, well, these platforms that have come ICOs, that looks like a security to me. Is it a property?
Yep.
A number of things. How is this going to give us clarity? Are we going to get clarity?
Yep. So I was sitting with a bunch of venture capital and guys and lawyers who've been in the crypto space for quite a while. And I'm going to answer your question by talking about this scenario. One of them jumped up and said, the US is going to determine how this is all going to end up. And I said, really? How do you figure when you've got the SEC saying it's a security, the CFTC saying it's a commodity, FINRA is saying that it's money, and the IRS is saying it's property? Really? Is the US really going to lead this path? Because if anything, it seems kind of confused. Actually, countries like Switzerland and Singapore and other countries have actually been much clearer about how they see cryptocurrencies and these ICO offerings. My view is, I think this is a global problem or situation, and it's going to require coordinated global regulators, or at least regulators in their jurisdictions getting together globally and coming up with solutions. But here's the problem. As you all might recall, in the financial services space, that didn't exactly happen. We had jurisdictional arbitrage. I'm afraid that we may end up with that now in this space. And I hope we don't, but I'll be very frank with you. I know US startups that have literally shut down operations and they've moved to Singapore or they've moved to Switzerland. This is a very mobile group of people. They have no problems if they feel like one jurisdiction's not working for them to go and move and headquarter somewhere else. And from just a pure country perspective, if your goal is to actually create a tech hub, if you're not tech friendly, people will move. And this is where the challenge lies. How do you protect consumers? How do you do the right thing as a regulator, but then also not scare every entrepreneur to walk out the door and go to another country?
It is caveat emptor, isn't it, right now? Yeah. Here's another question. Do you think crypto asset is a big threat to the current system dominated by central banks? Do you think it has the potential power to revolt today's system, both monetarily and on the social side? I know Lael Brainerd, the Federal Reserve Governor, just out with comments today. There's no compelling demonstrated need for a Fed-issued digital currency at this point, but he went on to say that the still relatively small scale of cryptocurrencies in relation to our broader financial system and relatively limited connections to our banking sector suggest that they do not currently pose a threat to financial stability. Would you agree or disagree?
Let's talk numbers, because I like numbers. The FX markets are $5.1 trillion a day in volume. based on the last BIS study, right? We're talking about 100 million, couple hundred million that go through volume-wise, maybe 1 billion on a good day in the cryptocurrency space. So today, yeah. But the thing that you have to watch out for is the exponential growth of how quickly this evolves. Between 2017 in January to today, no one would have anticipated what happened in May, June, July, through December of last year. That run-up was unprecedented, and nobody was prepared for that. Anyone who tells you that they knew that it was coming, I don't know, I'd question that. So right now, the answer would be it's not comparable. The traditional markets trump, volume-wise, the cryptocurrency markets. But from a culture, generational, and mindset standpoint, I think we need to think about what is going on here and why something that seems quite anti-establishment is taking hold. Think about how difficult it is for a global thing to become accepted as value around the world by a large group of people. I agree with people when people say, Bitcoin, this thing, like, it should have no value. Where did it come from? Well, here's the problem. It does have value because a group of people around the world believes it's got value now.
But is that the basis of valuation?
Look, it's got an issuance model, which, by the way, if you guys are interested in valuation, you should read Crypto Assets. There's a book out. There's also lots of discussion, white papers written by academic institutions, venerable academic institutions and central banks around the issuance model of Bitcoin in particular and other cryptocurrencies. There's some real economic underpinnings around how these things work. And so even though it's got no intrinsic value, but you could also say that about paper money. How does paper money have any intrinsic value?
Well,
other than it's backed by government.
Backed by government,
yeah.
With high credit rating, and there's gold, and there's, well, yeah.
Yeah. But
what backs cryptocurrencies other than a confidence bubble?
Well, what about gold, right? I mean, so there's a lot of comparable arguments that people make about what do people believe have value, and how does something become valuable? Diamonds. I mean, why is a diamond valuable? Because a group of people believe that it's valuable, and there's a scarcity value.
You brought up the book Cryptocurrencies, and I did the Cliff Notes version last night, and seeing the various points, and it brought up the old adage about the tulip mania back in the 1600s, 1700s, and that was a speculative bubble, probably the first recorded one.
How long did that last? I think it was short-lived.
I think during the blooming season.
Yeah. So here's the thing. I would love to use that line of analogy too, but it doesn't quite hold. This has been going on for about 9 years, going into 10. Bitcoin's died 900 times. I don't know. There's a whole website tracking how many times it's been called dead. It's not dying. And if anything, it's proliferated thousands of others, derivative equivalents of it, next generation versions of it. They won't all survive, like I said, but it's proliferating, not decreasing.
Some 1,500 different cryptocurrencies?
I think there's 2,000 now.
2,000 now? You said many of them by when will be out of business?
I think that most of them are probably, I think you have to go to the ICO website. There's statistics on this. By the way, this is what I love about this space. There's actually a lot of numbers and stats. You don't have to believe someone's view. You could actually go look it up yourself. Apparently, the ICOs that were done in 2017, the vast majority of them, and I don't know what the exact percentage is, but you can look it up, have actually failed. And they're just kind of floundering. They're not zero, but they might as well be.
So who will be the survivors? You mentioned an area that could be an area of success are the micropayments. Stellar was one that you mentioned. I know there's this new Lightning network that is coming out. It's a new protocol that's built on the blockchain that will allow for instantaneous transactions, et cetera. Is that a turning point to gain acceptability or survivability?
Yeah. So Lightning itself, the Lightning Network, is basically a group of people who are trying to solve for what we call the scaling issue. So because Bitcoin became so popular, it's almost like a victim of its own success. It started clogging up the networks because all these transactions were coming through, and the block size is only 1 megabyte, which means you can only fit so much data in 1 megabyte. It's just a fact. first, right? So then there's a big debate about, do we make the block size bigger, or do we actually find another solution? Lightning is a method, it's basically a way for you to have these transactions done in a very quick manner and low cost. Because the other issue that had happened in blockchain, in Bitcoin, was the fact that the prices of moving something around went from a few cents to like, I don't know, I think I tried to do one last year. I got really upset because it was like $80. And I was like, I'm not paying $80. I could do a wire transfer for less than that, right? It becomes uneconomically viable. So Lightning is trying to solve for what they call the scaling issue. And it's very promising. On the Ethereum side, just so you guys know, there's another big technical challenge that's being discussed, which is not only scaling, but this move from proof of work, which is mining, to proof of stake, which is not. It's the Casper project. So if you're interested in that, the first version of it was released, I believe, last week or a couple days ago even. It's hard for me to catch up. I do this 24/7, and I still find it very difficult to stay on top of every single thing that's developing. That Casper debate, by the way, from moving from proof of work to proof of stake, has been going on since pretty much the beginning of Ethereum's launch, and it's now only just happening. So what's interesting about this space is that it's very public. If you ever really want to know what's going on, I used to follow all the Reddit channels until there was weird censorship issues going on. I now just follow it on Twitter. If you follow the right people on Twitter, it's public. It's very transparent, almost a little bit too much sometimes. I wish sometimes they would just take it offline and stop bickering on technical nuances on Twitter, but you can get it, it's there.
I'm getting so many questions. I can't keep up with that. You think keeping up with cryptocurrencies is tough. Here's one question. A myth is that cryptocurrency helps money laundering. We've been talking about that in the fraud element. If not, any existent measurement measure the percentage of illegal money inflow to cryptocurrency investment? Is there a way to know how much illicit activity is involved?
So I'm going to bust one myth if it's still out there. Bitcoin is not anonymous, it is pseudonymous, meaning it can be tracked. They may not know exactly who you are, but if you've got a wallet and it goes from one wallet to another wallet, it can absolutely be tracked. And here's the brilliant thing about brilliant minds. There are now companies that are helping Interpol and FBI and all the other agents out there with software solutions that help tracking a Bitcoin. So if you're a criminal, you're pretty stupid using Bitcoin. And also, I would say, because it's trackable better than cash, for sure. The other thing that I would say is that if you are really interested, there is a paper that was written by, Bank of England has written a few papers actually on the topic, where they conclude that actually very little is actually being used for money laundering. And also there was another paper written in 2016, I believe, combination of the Bundesbank and 2 academic institutions that wrote a paper on this topic as well.
It is the most thumbed up question here is a follow-up to that, and that is, once cryptocurrencies become regulated and the identity of coin holders is transparent, that demand will disappear. Will it?
Interesting question. I don't know the answer to that. Anyone who is really worried about that have moved to coins like Monero and Zcash. So those 2 tokens, by the way, or cryptocurrencies, are focused on absolute privacy. There is no way to trace. Even the teams are hard to figure out where they are. That's real privacy. So if you're really worried about that, they're the ones emulating cash as closely in the digital space as you can get. So, there might be a movement to those 2, but the reality is that that would have happened already, without people were really focused on that bit alone.
There are a lot of people here in the audience who are also concerned about the environment and about the energy costs that go into mining. I was in Taiwan a few months ago doing a series on the efforts in the legislature and in the community there to build Taiwan as a new crypto hub now that China's kind of cracked down. But they're not going to be a mining hub because they already have power shortages. They have a lot of processing power on the island, of course, with TSMC and all the foundries, but not enough power. So what do you say about the detrimental aspects to the environment that mining causes?
Yeah, so a couple things have come up. One is the transition now that's occurring to thermal and alternative energy solutions. I mentioned a couple of countries to you. Iceland, Norway, even parts of Canada, there are use of alternate energy solutions for reducing costs of energy and also just the consumption and waste and obviously environmental degradation. So it is something that obviously is part of the conversation, but the majority right now, especially the ones that are probably done in this part of the region, are using a lot of energy. And again, it's Bitcoin and the ones that actually use proof of work. It's not every blockchain, but some people are saying that alternative energy solutions may actually be propagated or promulgated because there's such a push now to move to alternatives. It's happening. And whether it becomes a complete shift, we'll have to see.
Okay. Before this session, we were talking about where we are in the evolutional chain. Of course, Satoshi Nakamoto, is that his right? That's his name, right? Not his name, that's the anonymous...
It thing, yes.
It, yes. 2009, I guess, is when Bitcoin really took off, but we're really in the beginning stages, and you were talking about this being in waves. What wave are we in right now?
So I mentioned that even though this seems really new, it's not. It's been around for almost a decade. And when I say it, I'm talking about Bitcoin. But we've got all these waves of innovation that are happening. The proliferation of ICOs only really happened in the last couple of years. The use cases that are now being talked about that are non-financial related have only just started happening in the last couple of years as well. And so what I'm seeing is sort of, wave one, wave two, wave three. It's not just the singular, for those who are familiar with the Gartner curve, it's not just one curve, it's actually a whole series of them happening at different periods of time. And I think we still have more to come. I liken it to, do you guys remember when you may have gotten your first smartphone and that was pretty cool? Because you now could do stuff, but apps didn't come actually until many years later. Well, until apps came, you didn't really understand all the stuff that you could do on your phone. Well, think of blockchain as kind of your underpinning, and we're not even at the point where we've got apps that are really cool and pervasive. Opportunity.
A lot of the questions from the audience do center around fraud because nobody wants to lose their investment if this indeed is an investment class. One question is, what are the tricks? That might be the operative word in this question. What are the tricks to watch out for in an ICO valuation?
I'll be very frank with you guys. Being in the space as I have been, I probably invested in a handful of tokens of people I knew, meaning I knew the management team, I knew what they were building, they already had something built, or I had confidence that they were building it, and I read their white paper, and I actually believed and understood what they were, or at least mostly understood what they were trying to accomplish. That's the difference between when you go and get solicited via email or LinkedIn, you read a white paper that sounds really great, and then the next thing you know, they've run off, God knows where they're based. You gotta do your due diligence. If you're gonna be getting into this, there are lots of opportunities, but at the end of the day, my guiding posts are pretty clear. I either know the management team, I've met them, or at least I try to meet them. I make sure that I at least have a clue as to what is going on in this white paper, but even then, that's not good enough. You really have to believe that they've got a product or they're gonna have a product very soon. And this is the big issue right now, is people are issuing white papers without any product. It's sort of like, would you hand your money out like that? I don't know. It seems very odd to me that people would. My view is, look, if you're gonna wear the hat of an angel investor or a venture capitalist, then you need to put the rigor of due diligence like any other investment.
9 thumbs up for this follow-up question. What does an ICO do with the capital it raises? Sometimes flee to the Bahamas. Is it true it just jumped. Is it true that Bitcoin has a finite number of coin? How will this affect its value going forward?
So let me address the first bit. So some people have realized who've raised ICOs that it's not actually that great on the flip side. So aftermath. So you raise $30 million and couple days. That's fantastic. Wow, now you've got this big cash pile. Here's the problem, and most people use Telegram, by the way, just so you know. You now have probably 20,000 investors who are on your Telegram chat asking you when your product's coming out. You literally have to hire a group of people to manage your Telegram account because you're getting thousands, if not tens of thousands of messages a day related to your progress. So there's almost a level of scrutiny and transparency that you have to have immediately after raising that money, which sounds very similar to me like having a public company, except now you're dealing with a whole mess of people directly. That's a challenge, so in that way it could keep you honest, but let's face it, this is greenfield. There are a lot of greedy people who've come into this. Some will launch products, some will not. And my big concern right now is that we don't have enough guideposts for making sure that there's some level of protection. Because as much as I had wished that the community would self-enforce, and it is trying, it's not like it's not trying to come up with standards, it's just like gremlins, they're just coming out of everywhere. And there are too many people who are just, unfortunately, extremely greedy and dodgy.
It's the Wild West, frontier justice as well sometimes. But that raises the question as well, when do the big guys jump in? The 31 thumbs up for this question, the most liked question, 32 now. Won't the Visas and the MasterCards of the world use the blockchain technology behind it if it can be made more efficient to offer clients cheap international money transfers? And wouldn't that effectively kill the value added of cryptocurrencies?
Yes and no. So just so you know, MasterCard and Visa are already working on blockchain solutions. They've been on this for years now. So anyone who doesn't think they're already on it, they are. The interesting case is in developing nations, you've got a very different scenario. They don't have MasterCard and Visa. They don't have credit cards. They don't have bank accounts. Entree, mobile wallets, and crypto, because guess what? Even if people don't have running water or electricity, they have mobile phones. And those mobile phones are turning into, those feature phones are turning into smartphones at a rate that is staggering. So if everyone has a smartphone in their hand, basically a little mini supercomputer, imagine what you can do to distribute value. And that's where financial services at the developing nation level, and crypto in particular, has the ability to change models that exist in the developed nations that are harder to unlodge. Because think about it, if you've got existing financial infrastructure, how difficult is that to actually rip out and put something new in? It's hard, it works. If it works, like the argument would be is why would you go and break it? It works. You might innovate around the edges, but you wouldn't necessarily do wholesale leapfrogging. Well, similar analogy to what happened in telcos. Skip landlines, go to mobile phones. Well, how about this? Skip traditional fixed market infrastructure and financial services and go straight to mobile delivery of financial services in digital form.
A number of people are also asking just the nature of the anonymous creator, Satoshi Nakamoto. It's not known. What does that tell us about the evolution of the blockchain and crypto? It's not known who this entity is. So it adds to the mystery.
Some people say that, by the way, Satoshi Nakamoto stopped emailing and stopped communicating. I believe it was December of 2010, but you'll have to double check that. There are references to when he kind of disappeared, or the group disappeared. Some people would argue because he or the group, or she, took the head off of Bitcoin as a centralized place to go, it was almost better, because now you have no centralization. At least from an authority standpoint, because if Satoshi Nakamoto existed and everyone knew who that organization or person was, there would almost be a proclivity to go to them as a central authority, and there isn't. And so instead what you end up with is centralization in a different way. You've got now the sort of tension between the miners and the Bitcoin core developers, but neither single one of them are actually a central authority in that way.
I have one last specific question from somebody in the audience here who maybe has a Lamborghini parked outside. If someone made a fortune in cryptocurrencies and would like to convert $100 million into fiat, who does that? A bank? Raise your hand if that's you.
Someone out there. First of all, yes, it's possible, and yes, it's happened. Individuals not to be named, islands have been bought, cars have been bought, houses have been bought. You do it through those OTC desks that I mentioned. You can move that money around now. 100 million in one go probably needs to be fed through the market, but you'd go to an OTC desk and you'd ask them to handle that for you. It's not difficult anymore. It used to be, but not anymore. Here's the thing. Most people I know in the space who've made tons of money, who went in early, who bought in at the few cents or $1 or whatnot, who didn't lose it all by throwing their hard drive out the door, which you may have heard of as well. Those people are putting money back into building companies. It's going back into this network in different forms. The number of companies that have been formed in the last year alone with that money going back in, most of it is not being spent. Most of it's actually being put back into developing new companies.
I know we're running out of time, but just very quickly, and I know you've said you're not an evangelist for any particular coin, and you talked about it's in waves, but is it a bubble, and will the bubble burst sooner than later?
You mean in terms of price action?
Yes.
It's had so many ups and downs. If you look at just the charts in the last 10 years or 9 years, it's had a series of bubbles and bursts already. I guess the real question for most people in the mainstream is, if I get in now, is it, it depends on your time horizon. If you want to be a day trader, I would say get clued up before you go in and probably practice. If you're a long-term holder, and by the way, the term is hodler. What happened was someone mistyped an inverted L and D, so HODL. That's now actually a term. If you're a holder of crypto, you're a hodler, and I'm a hodler. So the time horizons for most people I know in the space are quite long. Yes, there's a whole group of day traders. My view is do your homework like any other asset class.
Should investor protection be a part of regulation, and will it be part of the regulation that will come out of the US?
I think it has to be at this point. What that looks like, I think, is very murky because of the lack of classification. And I get it, it's human nature. People want to put stuff into boxes that are new, but this is new. It's a different animal. It doesn't really fit into a box that fits neatly into the current categories that we have, which is why we've got the challenge.
Do you see any particular area in Asia that could become a cryptocurrency hub? Japan's had some very accommodative policies. China has not, where it became the world's largest mining country, the largest ICO hub, but now they've shut it all down.
Yeah. I think Japan versus China versus what's going on in Singapore is fascinating, and what's going on in Hong Kong. I think those, and South Korea even, they all have very different takes on crypto, and I think academic institutions are going to write some very interesting use cases around each of these countries and how they've approached whether they embrace cryptocurrencies or, if anything, they try to shut it down or control it.
Okay. Sandra Ro, thank you so much for your time
and
and your insights. We didn't get to all your questions, but thank you too to the audience.